Hello and welcome to Rural Delivery Online, where we speak with those working in and for New Zealand's primary industries here and around the world. Mick Harvey is a Rabobank Senior Analyst for Food and Agribusiness Research, and he was the keynote speaker at the South Island Dairy event held at Lincoln University in June this year. Mick, welcome.
Thank you. Thanks for having me.
Mick, you gave a message to farmers in New Zealand that said, recognise volatility in world markets, but essentially deal with it. You've got a good long-term picture. Can you just shape up a little more about how you put that to them?
Yeah, I suppose we separated it out by looking at the next 12 months and saying, look, it's going to be a tough 12 months because we know the global market's very weak, but we certainly can see the mechanics of recovery starting to build. But the reality is right now with the supply and demand fundamentals as they are, that it's going to be a few months yet. So we sort of think that the market should start to recover early next year, increasing up to, more normal levels in terms of pricing by the middle of 2016. So that's the reality of where the market is right now. So that means, for the next 12 months, it's going to be a challenging time for the industry in New Zealand. But, if we sort of lift our vision a bit further, we still think, the longer term outlook is still very, very bright. The demand story is still there, and these markets that are growing quicker than most other markets around the world are the ones that need to import products. So we know that there's going to be trade opportunities, and we know that the market needs to recover at some stage to generate the investment to meet the demand.
Could you just very quickly talk us through the demand and supply situation as you see it in those major markets, USA, EU, Russia, China?
Well, the reality right now from a demand side is, you've got short-term headwinds in China. They're overstocked. Demand is slowing a little bit, so they're not importing as much. That's the situation in China. And you've still got the situation in Russia there as well, which is, extended their ban on, imported food and agricultural products, including dairy. Now, that doesn't directly impact New Zealand, but it means Europe can't get product into that market. So that means that's spilling out into other markets. So the demand story's got some challenges. But then if you look at the supply side of the situation, milk supply has been quite strong for a period of time and still is quite strong, particularly in the Northern Hemisphere. It's obviously been a historical year this year with Europe unwinding their milk quotas, and we're right in the middle of their spring flush. So we've still got to wash through sort of that spring peak in terms of the supply situation. So that's really why you've still got this weak environment in terms of pricing.
There was a lot of talk about what the impact of the EU quotas coming off would be, and a lot of people were trying to pick it. Where do you see it coming now that there's been a little bit more time to see what might happen, and there was a surge just ahead of them coming off anyway in terms of production?
Look, they're certainly going to produce a lot more milk for the global market over the next, medium term. That's just the reality. But that's going to be isolated to certain member states. We don't think there's 28 odd countries in the European Union. Not all of them are globally competitive, and not all of them will increase production, but there's certainly a handful of member states that we think are and can be globally competitive. So it's sort of a double-edged sword. It means more competition in the global market from Europe going forward. But if you look at it the other way, the reality is we don't think, New Zealand and Australia and other lower-cost producers in the global market can meet demand longer term. So there has to be more milk from Europe, and there has to be more milk from the USA. Now, that, as I said, that means competition because they are gearing up to tap into some of these markets that, are traditionally New Zealand markets. But it also means that then the global market needs to trade at a higher price because they are still higher-cost producers. So that's fundamentally why we are very confident that the market needs to recover because these prices where we're at right now globally aren't going to be sustainable for dairy producers globally around the world to produce enough milk.
China's a very interesting one. A number of protein analysts have observed that that there may not be too much more elasticity in the price point for proteins across the board unless there's another really significant surge in wage growth or economic growth. How are you seeing that picture?
Yeah, look, we are a little bit more cautious around our growth expectations in China than some. We know the market's still going to grow. There's still going to be good growth. And we sort of look at dairy consumption as a whole in China and say it's going to grow, just over around 2.5% over the medium term. So that's still above the global average, but it's certainly not, the 4% that we've had in our models in past years. So that just highlights that, the markets are naturally maturing. So there's a lower growth rate going forward. And, what's creating some other problems is you've obviously got, a slowing economy in the background. So it's still going to be a good growth story and there's still going to be dairy demand growth, but it's not going to be what it was in the past.
Looking at New Zealand, and you've been over here recently, so you've had a chance to talk a lot more with people face to face and understand what the sector in general is doing in the face of this situation. Are you reasonably confident about the actions you see people taking? Have we got the message? Are we doing the right things to weather this storm and rebuild so that when the market comes back again, we're best placed to capitalise on it and grow again?
Yeah, I'm always amazed at the level of optimism in the industry despite the challenging times. I mean, we're looking at 2 years of very low milk prices, but I still get the sense from coming from across from Australia that the industry generally understands the longer term opportunity. So yes, there's going to be some headwinds in the next 12 months, and how farmers manage that can be quite problematic. But the general mood I always pick up is that the industry understands the longer term opportunity, and they know they are globally competitive, and I think generally are aware of the opportunity. So they there's still that underlying level of confidence and optimism about the industry recovering and having a vibrant industry going forward.
What sort of message do you have, I guess, for New Zealand producers with regard to what the outlook looks like for profitability? Never mind prices, what the impact is for the individual dairy operation in terms of what they're getting out of it.
Yeah, look, I think, for the next 12 months, cash flow is going to be the biggest issue. I mean, it's most producers could have got through quite comfortably with one low year of payout. When you're looking at back-to-back low years of payouts, it means you're going to have to look at your cost structure, maybe look at getting some additional, finance from your banks to get through. So I think that's the problem, that 1 year is quite easy to manage, I think, for most producers, but it's the back-to-back ones that create the cash flow problem. So that's the message, banks would be delivering to their farmers and producers, getting on the front foot, looking at their budgets and making sure they've got the right mechanisms in place to manage the next 12 months.
What about other inputs, feed, fertiliser, petrol, diesel, that sort of thing, and of course, I guess, access to capital to weather this storm?
Well, that's where there is some good news. I mean, look, if you look at the interest rate environment, I mean, New Zealand's still got high interest rates compared to the developed world, but we've obviously seen a recent cut in interest rates, and there's the possibility of more to come. So the interest rate environment might improve, but if you look at other inputs, and you mentioned fertiliser. I mean, globally, fertiliser prices are quite weak compared to where they've been in the past. So that means affordability of that key input looks reasonably good at the moment, and that's really because globally there's pretty soft demand because crop prices are quite weak at the moment. So there's a lot of cautiousness around application rates in some of the big cropping regions around the world. So we don't see any upside risk to fertiliser prices anytime soon. And then you've obviously got feed costs or feed markets in New Zealand look okay. They look like there's plenty of stock in the supply chain, so there doesn't look like there's much upside to feed prices as well. So there is some good news in terms of input costs on the horizon, yeah.
Kiwi farmers are now looking into Fonterra, or those who supply Fonterra, and are asking the question as to whether or not that business is adding enough value. They accept that it has massive supply efficiency and things like that, but they're wondering, hey, are we actually getting enough on the supermarket shelf? Are we building brands? Are we really adding value? That part of your job is to look into that side of the market as well. What are the trends you're seeing there? How do you think New Zealand is doing on that score?
Yeah, look, I can certainly understand the strategy to try and add value. I mean, if you look at consumer demands globally, I mean, there is a growing preference for imported ingredients and products, given, a number of food safety issues we've seen in the past. And the obvious ones here are around liquid milk for Asian markets and infant formula. So I can certainly see the trend and the opportunity to jump into those markets. But I suppose, the reality is that it's challenging at times as well. I mean, it takes lots of investments. There's another layer of cost structure that's added to the business to then develop the product, market it and promote it, and then, build the supply chain. So, I can see why companies are trying to do that. But, yeah, absolutely, it can prove challenging, and it's not always profitable overnight. So it takes long-term investment. And I think the other one, obviously, is, the Australian market is a big, important market for Fonterra and for New Zealand. And, they've had a footprint in Australia for a long, long time. And they've got some very strong brands. But the reality is in Australia is that it's a challenging market for dairy processors, for all dairy processors. There's lots of competition for milk, so they're having to pay a very high milk price to retain and hold their milk. And then if you look at the retail end, we've obviously got a very tough retail environment that, we have two big retailers that don't really allow you to pass on higher costs through to the consumers. So that's squeezing margins for processors. And Fonterra is obviously copping some heat from shareholders in New Zealand for that. They're not alone in terms of how challenging it is in Australia.
Mick, the dairy industry is hugely important for the New Zealand economy as a whole, obviously. And many in the general public are wondering, hey, are we really heading in the right direction with this industry. It is based on a commodity market. Should we be finding something else to do with our land? What's your response to that?
Well, I certainly don't think there's anything wrong with being a commodity producer. And I think, my personal view would be, that's what New Zealand do very, very well. They produce a lot of milk on farm that's globally very cost competitive, and that's because of the production system being a low-cost pasture-based system. They do that very well. And obviously, post-farm gate, there's lots of scale in terms of the size of the processing facilities that you do have. So, from paddock through to processing, very globally competitive at producing milk in large quantities for the ingredients market. So I don't think there's anything wrong with that model. Yes, you can try and add some value around the fringes in terms of your milk pool. But, I think New Zealand's as good a producer of low-cost ingredients as anyone in the world.
Mick, we're running short on time here. Just one last question for you. I guess for New Zealand at least, the poster boy for value add over the last few years has been infant milk formula into China. What other types of value-added products are you seeing as perhaps becoming a more important part of the marketing mix for New Zealand?
Well, I think there's obviously going to be more focus on not just infant formula, but more of the nutritional powders, whether it's for other parts of the population, whether it's the elderly and so forth. So that's obviously one trend, is about not just focusing on infant formula for China. There's obviously a big push at the moment for, consumer packed liquid milk for some of these markets across Asia as well. There's lots of investment and opportunity there, I suppose, that companies are looking at. And the other one that's always there is also how do you actually maximise the value of your waste streams as well. So there's plenty of opportunities around, tapping into those ingredients and adding value for the dairy exporters.
Yeah, all being on trend for more targeted nutrition. Mick, thanks very much for your time today. We really appreciate it. We'll talk to you again sometime.
My pleasure. Thank you.
Thank you. Bye-bye.